a crisis in North Korea, a nuclear war into the market. I think that would be a mistake. You know, I've pointed out before, geopolitics is always a surprise, sometimes positive, sometimes negative. You know, it always scares you. Read the paper in the morning. I think it would be a mistake to allow a person who's like that to have a nuclear weapon. I mean, China has a huge interest in not having him also having a nuclear weapon, because if they're not part of the solution, you're going to have nuclear weapons, in my opinion, in Korea. You have nuclear weapons in the Philippines. You have nuclear weapons in Japan. If the growth picks up from here and the Fed is right and they raise rates a couple of times more, that's a good thing. When you're in the emerging markets, the most important thing is that you have growth. So I've been a strong believer that we're going to 2% in spite of not having good policy. We'd be growing faster had we had really good policy. I think the world has synchronized growth. If it's followed with some good policy, which you're doing in this country. But I think your prime minister has done some very smart, tough things to do. You know, it's amazing he has created a majority with demonetization. Maybe, but if you reduce corruption, a lot of countries have state-owned enterprises. Yes. I think in general they're a bad idea. You know, they lead to a lot of corruption, misuse of resources, particularly in banking. I'm not talking about India yet. Cryptocurrencies everywhere. It's creating something out of nothing that, to me, is worth nothing.
You think they could end badly? Is that a fear?
It will end badly, yeah.
Oh.
So my view is people should look at the hard change, which is going to be great for the future of India, and that's my takeaway.
Hello and welcome to the highlights of the JPMorgan India Investor Conference. You heard the big man himself, Jamie Dimon, the chairman, telling you that he is worried about the Korean nuclear issue, especially because it could mean nuclear proliferation and the wrong people having these weapons. He is very, very bullish on growth itself, bullish on global recovery in general, and bullish on the India story. Well, in the next half hour, we are going to get you highlights of the key speakers at the JPMorgan India Investor Conference. First among them is the head of emerging markets research, Luis Oganes. He believes that the emerging market story has just begun, and if the issues like Korea give you a dip, then he would advise investors to buy those dips, especially in emerging markets. Listen.
Well, you know, I think that we all are paying attention to these headlines, and we all, you know, deep down fear that one of these days we're going to wake up and see something actually happening on the military front. But the reality is that, you know, markets, for much that we can talk about it, it is almost an impossible event to hedge. You know, it is impossible to predict with accuracy. You know, I think that in general, given the potential consequences of an armed struggle, we still believe that diplomacy in the end will be the way to go. Maybe it is complacency, but the reality is that no one, I have not seen a single investor with an active strategy of trying to hedge this. It will be very expensive. You could keep the hedge for however long. The risk will never materialize, and you will be forced to, you know, take it off. So,
but the market is also buying every dip provided by Korea.
That's a reality, you know. So every dip is about an opportunity.
But you know, Luis, should one now accept the reality that North Korea has got nuclear powers, and probably diplomacy is the only way out for global, you know, global central banks and global, you know, large economies to accept that fact and sit on the table and dialogue?
Well, you know, the reality is that if Korea gets to develop its nuclear arm, it's because at the end of the day, China is allowing it to do so. Okay. So, you know, I think that the ultimate negotiation is going to need to be with China, and probably China's price to force North Korea to denuclearize will probably be the removal of American forces from South Korea because they don't want them to be next door. So this kind of bargain, you know, it would not be an easy discussion, an easy negotiation, but that is the ultimate way out, right? So I think that we will probably get to some kind of arrangement in that front before we get both sides literally blowing themselves up. They're too close to each other.
Okay, I just want to get the conversation back to finance and not military strategy. Well, you know, the other reality is that we have seen all the commodities kind of moving off their highs. This emerging market rally has also been because some of them are supported by strong commodities like Brazil and Russia.
Yeah.
Do you think EM still have legs to run if commodities pick off?
Well, there was an element of why commodities have rallied so much. I think that the fact that global growth is doing well is certainly a support factor, but I would say that, you know, when you look at copper or other base metals having rallied 25% year to date, you think, okay, the global economy looks fine, but not that good, right? So there is an element, probably speculation. There is this element of accumulation of reserves or commodity stockpile by China. So I think that after this rally, some correction is probably due, and this is probably what we're seeing here. Overall, I would say that we still are keeping a relatively constructive view on emerging markets, because for us, the key for the asset class to keep this appeal factor is that it is on average growing, which is something that was not happening before. We can discuss, India in a few minutes, and maybe India is a little bit of the exception just because there have been some disappointments in the last couple of readings. But in many other large EM countries, it's been the opposite. It's been positive surprises in growth readings. And I think that that is going to keep the asset class, positioning there as a place to be while we sort out, all the various moving parts, risks, G3, monetary policy adjustments, etc.
So where India stands out right now? You were constructive on emerging markets, but neutral on India right now?
So India has been, I would say, within the narrative of EM growing faster, delivering higher yields, having central banks that up until recently, have been cutting rates. India was right on center of that story. Now, we have had, of course, a couple of things happening recently that were India-specific, so in which India started to deviate from the EM narrative. One is that we had some disappointment with growth, and we were ourselves forced to downgrade the full-year growth forecast. So while we are upgrading many other countries, we downgraded India. Granted, at 6.8%, which is the latest projection for this year, it's still the fastest-growing economy in the planet. So so much for getting too upset with that number. But I think that I think what we're seeing in general, the interpretation that we have for this deceleration and this negative surprise is that we're seeing the short-term cost of the government deciding to take important structural reforms that will take time. I mean, we think that the benefit will be seen eventually in the medium term, but in the short term there is a cost associated to it, and I'm hoping that the authorities are able to explain that to the population so that people don't get too anxious about it.
About the GST, yeah. You heard a great deal from Indian policymakers. What will make you bring back India to overweight stance?
I think we would like to see, how long this short-term growth cost. So you have, between GST and the demonetization strategy, it is a bit. They are very, innovative strategies. Have not been applied as such in other countries. So it's hard to tell whether this is a matter of a couple of quarters and we'll go back to high growth. It could take longer. So we need to be prepared for that. The reality is that when you look at equity markets, equities rallied quite a bit in the early part of the year. So I think that consolidation is probably, when I hear investors, you know what, I'm taking profits, because I think that we've probably seen the best of it, and I want to sit tight and see what happens with the growth numbers going forward. I think that's a sound
Luis,
strategy.
Could that not also be a tactical mistake? Because in spite of foreign investors being net sellers, the Indian market has performed along with other Asian markets, more or less. That's the wall of domestic liquidity coming. So is there a chance that foreign investors may be missing out?
When you take the chips off the table, of course, and I would say that that's why, even though on average our equity strategies have moved from overweight to neutral equities, there's still some countries where they are still keeping the overweight. So you don't go back to neutral everywhere. So you just keep some dry powder somewhere in order to hopefully, if we are wrong, just get some payback.
So where China stands out right now in the emerging market basket, and in that context, what is your view on the commodities? Can they further rally from here?
So China, it's been a situation where actually in recent quarters, every single quarter at the end, China surprised on the upside. We were a lot more concerned. We started this year with a much more conservative growth projections. We've been a couple times forced to upgrade. We're now at 6.8% for the full year. We have a forecast for the second half of the year of 6.4. We think that we're probably too negative and that it'll be maybe somewhere a bit higher. So, China last year, around this time last year, they adopted very aggressive monetary easing. And as you know, monetary policy has a lag of maybe 9 to 12 months to be effective. And now, third, fourth quarter is when the easing of a year ago may start to show up. So we're actually bracing for the possibility of upside surprises in Chinese growth in the second half of the year.
Okay.
So that's why we're not overly concerned with the commodities, semi-correction we're seeing here, because we think that, that if the China data in the end is surprises on the upside.
But in that case, will that mean that a lot of money moves out of India into China in the emerging market basket?
For equities, there is some possibility of that rotation because, again, people are looking in the gains in India, and if China surprises on the upside, you will see money shifting that way very quickly.
The currency fell to some 11-month lows, and it's falling after a long time. It's a big relief.
Yeah.
Is that changing your perception of currency-dependent sectors like pharma?
The market was anticipating the possibility that the Fed may be, taking off some of the dots in the near term, or may actually, express a bit more of less assertiveness about the December hike, and that didn't happen, right? So Indian rupee was not, in that respect, the exception. But I think that there are some drivers for the Indian rupee that probably are not going to be that supportive in the second half of the year compared to the first half. First of all, there is some deterioration to speak of in the current account numbers overall in the balance of payments. From the side of foreigners that participate in the local fixed income market, their quotas are being exhausted, so you have the possibility of some imbalance in supply and demand in the second half of the year. So we think that probably the best of the Indian rupee rally is also behind. We're not thinking that the dollar is going to strengthen massively from here, but we're basically neutral on the.
Which is why, is it affecting your stock selection?
Let's say that it's not now being seen as a support.
Okay.
But again, we're not turning negative. We're not thinking that we're going to be seeing a massive depreciation for the Indian rupee.
Well, that's Luis Oganes telling you that he is confident about emerging markets growth, and even about India, would be happy if the macros are left without being disturbed by any increases in fiscal deficit. Well, we need to take a break, but coming up, we are going to speak to the head of the India Equity Research Group, Bharat Iyer, and glean from him the key takeaways from the JPMorgan India Investor Conference.